Hey, ever get that feeling something big is about to happen in crypto, but nobody's really saying it straight? Well, imagine this, a single Bitcoin address, silent since 2011, suddenly wakes up and moves a whopping 9.6 billion worth of BTC. Yeah, billion with a B. And that's not even the full story. At the exact same time, US lawmakers passed new bills that could totally reshape how crypto works in America. If you're even a little into crypto, you already know when whales move, markets shake. But this time, it's way deeper than that. Today, I'm gonna break down what really happened, no hype. Just fact sand, what it means for your portfolio. So grab your coffee, because this one's wild. I'm Mansoor, and you're watching Trading Strategy, the channel where we break down crypto market news in simple, clear language. No confusing jargon, no fake hype, just what's real. Right now, this channel is all about keeping you updated with what's actually happening in crypto. But the bigger goal? Once we build a strong community here, I'll start teaching live trading, sharing signals, and giving real-time market analysis. So stick around, big things are coming. All right, let's get into it. Earlier this week, a very old Bitcoin wallet, one that received coins back in 2011, moved over 140,000 BTC. That's around 9.6 billion. Now, this isn't just a big number. This is historic. This wallet had been completely silent for 13 years, no activity. And then, out of nowhere, boom, nearly 150, 0 BTC gets transferred. Now here's where it gets interesting, or maybe suspicious. At almost the exact same time, the US House of Representatives passed not one, not two, but 3 major crypto-related bills. One of them is called the Genius Act. That one alone could change how stablecoins work forever. So naturally, people started connecting the dots. Some voices, like Jacob King from WhaleWire, came out swinging. He posted this on X. This will burst the biggest bubble and fraud in financial history, Bitcoin. It's entirely propped up by fake money printed out of thin air. Now, let's take a breath. That's a big claim. And yeah, it sounds scary, but we've got to separate the fear from the facts. First, let's talk about the wallet move. The BTC wasn't sold. Let me repeat that. It wasn't sold. It was moved likely from one cold storage address to another. Some people think it could be for better security, inheritance planning, or maybe even just cleaning up old wallet architecture. Either way, it's not necessarily bearish. In fact, it could be neutral or even bullish, especially if it's going into a trust or institutional custodian wallet. Now, back to the Genius Act. This bill, passed in the House, is focused on making stablecoins like USDT and USDC more transparent. It requires regular audits, proper collateral backing, and stronger regulatory oversight. Sounds reasonable, right? But here's the twist. Stablecoins are huge liquidity engines in the crypto market. They're how most people enter or exit positions. If the flow of USDT or USDC gets squeezed by regulation, the crypto market could face short-term turbulence. So, was the whale preparing for that? Possibly. And the timing is too perfect to ignore. It's like someone knew regulation was coming and said, let's get this money moving before the headlines break. But wait, there's more. In the middle of all this noise, institutions were doing something very different. They were buying. On the same day as this chaos, spot Bitcoin ETFs saw a net inflow of over 500 million, the 11th straight day of positive flows. Let that sink in. While influencers were screaming about market collapse, institutions were quietly dumping $500 million into BTC exposure. This tells us something big. Institutions aren't scared. They're positioning. Let's also quickly touch on the other two bills passed alongside the Genius Act. One is called the Clarity Act. It aims to give crypto firms more well-defined rules, basically, helping companies understand what's allowed and what's not. That's something the US crypto scene has needed for years. The third bill is called the Anti-CBDC Surveillance State Act. It's a clear message that the US isn't planning to launch a centralized digital dollar that can track your every move. That's a big relief for people worried about financial privacy. So zooming out, a whale moves 9.6 billion in BTC. 3 major crypto bills pass, pushing regulation forward. Institutions pour cash into Bitcoin ETFs. And lawmakers actively say no to surveillance-style digital money. You tell me, does that sound like a market collapsing? Not really. If anything, it sounds like a market maturing. Sure, short-term corrections can always happen. Maybe even a mini sell-off if more whales move funds or if Senate hearings delay the bills. But the foundation, it's getting stronger. Let's also not ignore market sentiment. The crypto fear, greed index, is still above 70. That's in the greed zone. It shows that retail investors, despite all the news, aren't exactly panicking. They're still hopeful. Some are even doubling down. So here's what I'll be watching over the next few days. Does the whale move more BTC? If any of it lands on exchanges, that's a short-term red flag. But if it stays in cold wallets, then we're probably okay. Does the Senate pass these bills too? That could be the turning point for legal clarity in the US, something we've been waiting on for over a decade. Do ETF inflows continue? If big players keep buying, that's a signal they're preparing for a long-term bull phase. Before I close out this video, I want you to ask yourself something. If institutions are buying, if governments are starting to regulate properly, and if whales are shifting billions instead of dumping them, do you really want to be the one sitting on the sidelines? Let me know in the comments. Is this bullish, bearish, or just confusing? Whatever your take is, we'll keep watching it all here on Trading Strategy. If you got value from this, hit like, drop a comment, and don't forget to subscribe because we break these stories down with zero fluff every single week.